you talked in the speech about some of the dynamics we've seen in the first half in terms of strong demand, supply shortages. Things are changing quite rapidly. We saw the incredible collapse overnight of the benchmark price. How concerned are you particularly on that demand front into the second half, and what impact are you expecting to see from that lower Chinese yuan?
Well, I think at the beginning of the year we actually predicted that, or we indicated that our expectation was Chinese steel production would grow at about 4% for the year. So what we saw in the first half was 9.9%, which I think exceeded everybody's expectations. So I think there's some seasonality in it at the moment, and we may find that it's a bit slower in the second half, but certainly it will still be up year on year. And 928 million tonnes last year. Certainly that first half has been very strong. As I mentioned, some seasonality currently, but we stay focused on the things we can control, which is safety, production and cost. And by being the lowest cost producer, we can still optimise margins.
And I mean, we see mills in the red again. That lower local currency isn't going to help them. What are you sort of expecting from what we've seen in the past 24 hours with the Chinese?
Well, I think that's fairly recent, so we'll wait and see how that actually unfolds. Certainly there is some volatility currently, and that's why we stay focused, as I said, on those things we can control. We've seen the benefit of the changes we've made to our product mix with the introduction of West Pilbara fines. So we've seen that price realisation really narrow, and for the June quarter we were at 87% contractual realisation and 92% revenue realisation. So we're sort of back to levels before there was that very wide spread, and that's been driven largely by the profitability of Chinese steel mills. As that profitability has come under pressure, we've seen strong demand for the lower iron content ores, and that's really driven that very strong price realisation that we've seen.
But how concerned are you guys about that volatility and about the impact of the sort of rising trade tensions on global markets? I mean, you're not just... You are an iron ore producer, but you're also looking for industrial metals, exploration, putting a fair bit of money into that. I mean, in terms of the long term, how much worry does this kind of rising tension cause you?
Well, look, I think in terms of volatility, we've often said that the market is cyclical, and so that's why we're so focused on being the lowest cost producer, because if you look back over the last 2-3 years, the iron ore price has fluctuated significantly. So again, by being the lowest cost producer, we continue to drive those very strong margins, and we have a deliberate product strategy, so we're introducing a higher grade product as well. So I think our strategy is unchanged. We know the market will go through cycles. We'll be the lowest cost producer. We stay very connected to our customers. And trade tensions are clearly having some impact on markets more broadly at the moment, but there is still strong demand for iron ore in China, and we've seen that increase in steel production. And at Fortescue, we look at a very multifaceted relationship with China. Not only do we sell iron ore, we've procured over $1 billion of products. One of our largest shareholders is a Chinese-owned SOE steel mill. We have relationships with universities in China, and just recently we've established our own entity in China to sell product directly in local currency. So I think, again, that can address some of those concerns around currency fluctuations as well.
Elizabeth, you've talked about WA's strong connection to China and perhaps Australia not being too East Coast centric. With these trade tensions rising, are there any policy settings that government should look at?
I think rather than I'll leave policy to the policymakers, I just think that actually from a trade, the importance of trade and the value of that trade is so critical to Australia. And I think I just mentioned it's about $208 billion of trade, bilateral trade between Australia and China. So it is critical to the Australian economy, and I think that's important that is understood and recognised, which I'm sure it is.
I was speaking to Paul Everingham yesterday about, and he's been on a recent visit to China. He told me that there's a very, very strong anti-US sentiment that he felt when he was in China. Have you been up there lately, and have you felt that sentiment, and have you felt it possibly sort of spilling over into sort of Australian relations with the country?
I haven't been up there since the end of March, and certainly on my last visit, and I was there about 3 times beginning earlier in the year, I didn't get that sense of very strong anti-US sentiment. So I can't really comment on the current environment, but certainly we're not seeing from our customers any indications of any concerns, and this very strong demand continues for our iron ore, as evidenced by as I said, that steel production the first half of the year, which has been incredibly strong.
There was also a story going around about the suggestion that prices were being manipulated by suppliers, which seemed odd given it was the Brazilian disaster that precipitated this. Had you heard about those suggestions? And there seems to be some pushback from customers not happy about the high prices.
I haven't heard about manipulation of prices. I think there have been some concerns expressed about the volatility of trading of derivatives on the DCE. So I think that has been an area of focus for China in terms of that sort of trading in futures, maybe driving some of that volatility in iron ore price and sort of firming up the iron ore price as well. But that's I know that's something that China is looking at in terms of that volatility and the impact there. But the fundamentals of supply-demand are that earlier in the year there was 90 million tonnes of iron ore supply that was impacted by the disaster in Brazil. And I think that really underpinned the strength and the run in the iron ore price at that point in time.
Elizabeth, do you think there's kind of a lot of talk about red tape at this conference? Do you think there's too much red tape for companies like yourself to go through to get an approval of a project through?
Look, there is a lot of red tape. I think the biggest challenge is state and federal, so where you have different time frames and potentially duplication. I think that's the most frustrating. I think there's a genuine willingness by the state government to create jobs and invest in the regions, so we find that we can have those discussions. I think there have been some challenges as well around some of the resourcing of certain departments, which has been, I think, a bit more challenging. But I think there is that willingness, and it's just the fact that we do have some duplication at a federal and state level in any efforts, and I think it's just been announced that there's going to be a Productivity Commission review into both federal and state overlaps, so that may take sort of 12 months, but I would encourage that because that's where some of the approval challenges and the hold-ups can be.
What would you like to see come out of that review?
Well, I think it's a simpler process in terms of going through the state and the federal approval processes.
When Ironbridge comes on, you will be port constrained, effectively. I mean, the port will be the major supply. Given that BHP had an almighty punch up to get their last 5 million tonnes due to dust concerns, where are you guys at on that? I mean, do you have space at the port or export capacity at the port to soak up those? Or
we have space at the port. So part of the Ironbridge project is we actually have a dedicated storage facility for the magnetite project, which is actually a covered shed. And so we're working with the Pilbara Port Authority, but there is very strong engagement from the state government in having a successful magnetite project in Western Australia. We're creating jobs during construction, creating jobs once the site is fully operational. So we've got strong engagement, and certainly we have plans in place that don't indicate any issues with our ability to load an additional 22 million tonnes of magnetite.
So you've got your current berths, you don't need extra berths, you've got the capacity there, you don't need to put your loader in.
We have the capacity through our existing infrastructure, because one of the benefits of the magnetite as well is that we can actually blend it with our existing products. So we can either sell it as a standalone product or we can blend it with our hematite. So we're looking at having that flexibility and the ability to adapt to market conditions at the point in time.
And the dust restrictions in Port Hedland don't affect it because it's concentrate? That's my understanding?
It's there in a slurry, it's dewatered, it's stored in a covered shed, so we've dealt with all of those concerns. Yeah.
So the dust limits on exports of export producers don't affect your magnetite? That's not something you have to go to? Yeah, cool.
Elizabeth, you said strong engagement with the state government. Any indication yet if you'll get the same royalties, concessions that Sino Iron and Jim Pelby got with their magnetite project?
Well, we've been on the record as saying that we support a level playing field. There's nothing further to report on it at the moment, but we certainly advocate strongly for a level playing field.
Just back on the supply side, obviously the environmental restrictions in China seem to have been a little bit looser this year compared to last year. But how are you sort of planning for potential closure of capacity ahead of the big 70th anniversary celebrations? Obviously, expecting that.
I mean, we stay very close to the market, obviously, and work with our customers, and we've got our marketing team there. So we plan for that, and if there is some views that there will be some seasonal change in demand, then we can schedule our maintenance activities, for example. So we work closely with our teams. That's why we've integrated marketing and operations. So if we think there's going to be any form of slowdown, then we can schedule any of our major maintenance activities. But we've been through that many times, whether that's seasonal or whether it's a specific event, a holiday event, for example, then we've worked through that.
I mean, broadly, the strength that you're expected to continue to see in demand, should that mean that, you know, however far we see prices fall, the floor should be certainly above where we were prior to January, prior to
I'm not going to predict the price. I just.
Where's the direction, rather than not asking you for a number?
No, but you know, it's not about predicting the price. I think for us, we're very focused on our product suite because that actually has changed our overall price realisation, and that flows straight through to the bottom line because we've actually outperformed the index because we've actually changed our product mix. So it's not simply what is the index price doing. What can we do to adjust and adapt to market conditions so that we can optimise margins? And that's how we approach it.
You paid a special dividend very early in the season to get out ahead of the election. Obviously, everybody expected that result to be differently. You will have burnt a fair amount of franking credits in that, and given what has happened with the iron ore price and the fact we haven't had another sort of tax payment cycle since then, you're probably fairly low on franking credits.
We had a lot of franking credits.
Yeah, fair enough.
We had a huge amount of franking credits. So we've been generating franking credits for some time. So no, there's no issue around franking credit availability.
Yeah, okay. So
within our dividend guidance, there's no issue with being able to pay within our guidance.
But with given the amount of, Rio's declared special dividend, the expectations that BHP might, unlikely that Fortescue now would do so given policy and the fact you've already made a payment.
No, we're still generating significant. Every month we're generating more franking credits, and even the way it works, we pay in instalments during the year, and then we pay a top up in December, and you know that's always a bit of a sort of bump to the franking credit balance as well.
There's still a healthy balance, Nick, after that 66.
Just getting back to red and green tape, would you say that you would have been able to bring Eliwana online sooner had the approval process has been more streamlined? Would you like to have been able to bring it forward and haven't been able to, or?
No, look, our schedule for Eliwana has been well known for some time now. So December 2020, first ore on train, and that's not been impacted by the approvals process, and that sort of fits sort of neatly with our overall plans and our capital investment profile.
So maybe a couple more guys and then wrap it up.
I wasn't on the previous call on the half year results.
Quarterly.
Can I ask the obligatory 7-day question? What are you?
It's not obligatory.
What is the point here? What are you doing? What's the plan over there?
Oh, look, with this, our chairman's made an introductory visit to West Africa, and that was a combination of looking at economic opportunities, but also focused on philanthropy. But you know, we're very active in the business development space. We've got people here at this conference who are also from our business development team, and as a large iron ore miner, you'd expect us to be looking at all opportunities. There's nothing happening at the moment, but we, you know, 3 years ago we weren't drilling in Ecuador either. So you know, we've been very active in terms of South America, and we continue to look at opportunities. But I'm not going to comment on any specific opportunity.
But the president of Liberia's press release said that there was a local company formed. I can't remember the name of it, Fortescue, something or other, which is the traditional pattern of it.
I don't mean to say that the president of Liberia is wrong, but that's not true.
Okay.